Good afternoon, and welcome to the end of week market review for June 21st, 2013. You're going to see that our market barometers are declining bearish on both the US and Canadian side. This was after having quite the steep decline throughout the week. So our agenda is basically to go through and take a look at the market news. Here we want to see what's been happening on a global scale and how it's been affecting the US markets. We're then going to go ahead and take a look at some economic reports. With this, we'll be able to get an idea of what's been going on within the US economy. We're then going to move over and take a look at some technical analysis. While we do that, we'll be looking at both the S&P 500 as well as the Toronto Stock Exchange. We'll be reviewing charts on the daily charts as well as weekly charts. While doing that, we'll be looking at both short-term and long-term. Finally, we'll close things off by taking a look at the volatility indicator, the tool that we use to identify just how much volatility is in the current marketplace. Alright, so we can see that the markets did end the week down. The Dow Jones ended up going down 1.80%, with the S&P 500 down 2.11%. Most of these declines was coming from the Federal Reserve, as they were mentioning that they will be coming out of their stimulus plan. Now, no dates have actually been identified. That might end up happening in a few weeks. That might end up happening in a few months. Until we know, there is definitely some concern in the marketplace, though. Taking a look at our commodities, you're going to notice that they are all down. Right now we have oil down 4.02%. This puts it to $93.95 per barrel. We have silver down 8.78%. This puts it to $20.06 per ounce. We have another large decline from gold, which is down 6.99%, putting it to $1,292.80 per ounce. And finally, we have the US-Canadian pair, which is up 2.82%. This puts it to 1.0472 pips. Taking a look at our economic reports, the one report that we want to really take a look at here is the initial claims. You're going to actually see that we had a higher than expected jobless claims report, where we had 354,000 filings versus the expected 345. When that happened, you're going to see that it affected the markets as well. Right now, we're looking at the S&P 500 on the daily chart. What you're going to notice is that we've had a significant point of resistance and a very significant point of support. A couple days ago, we saw that the S&P 500 decided to break down below that support level and is now still trading down below that. Although we had a little bit of a good day on Friday, it definitely wasn't anywhere near enough to fix that decline. We also have the MACD very declining. We've got it below zero and below the blue line, which means we are straight up declining bearish. This is technically considered the worst of all the trading scenarios. Zooming back a little bit, you're going to see that the S&P 500 is definitely below its weekly support as well. This means that both short-term and long-term support has been violated. Now, we do have a 26 EMA as well as a 40 EMA, this red and black line here, which will be acting as support as well. We're going to hope that if it's going to end up finding support, it'll happen at the 26, though it is very likely that it will also happen just below the 40 EMA. As you can see in the last 3 or 4 examples, it really didn't have any problems going down below that, even if it's just for a week. And now we've zoomed back even further. We're going all the way back to about 2002. You're going to see the growth that we've had over the last several months and several years. We've definitely had a really good run. We can't say that this is a catastrophe by any means. We can't say that this correction is even bad, because anything that moves up on the S&P 500, as well as any other stock or exchange, does have its occasional dips along the way. It's very possible that this moment that we're looking at right now is nothing more than one of those little dips. Once it finds its support, it'll work itself back up again and reach even new highs, with it potentially going up to 2,000. And here we are looking at the TSX. You're going to see that it is also declining bearish, and it's just working itself down as well. You're going to see that it's got a few points here around 11,900 and 11,800 where we have some cycle lows. So we do have some psychological levels of support there that we have in place that will definitely help keep the TSX up. Looking at its weekly chart though, you're going to see that it's trading below its 26 and 40 EMA. So we don't have any EMAs to use. We're going to be strictly relying on the couple of red candles here for support. If we break down below those support levels, we could end up seeing the TSX dipping as low as 11,250, where its previous cycle low has been. If it dips down below that low and breaks down below that support level, we will be looking at the TSX at some all-time lows until we go back even further. You're going to see that that low is a significant low. Aside from that, the next significant low is way down here at 7,500. So we're going to expect that we won't be going that far down. Obviously, though, we can't say for certain where the markets are going to go. It's all going to depend right now on what happens with the Federal Reserve and their decision to pull back from their stimulus plan. All right. Finally, we're looking at the volatility indicator. You can see that it is currently at 18.89. It means it's a little bit high. We don't usually like it this high, but it's still within a safe range. It's just a little bit volatile right now. We'd be much more concerned when it gets into the 20s, and then absolutely concerned if it's trading within the 30s. 30 is that magic number that we look for, or the industry looks for, that says, you know what, now things are really volatile. But you can see that the indicator is up 10.21% from last week. Now this is at the closing price. If you take a look at the wick, you're going to see that it went up even higher. It was up a significant amount. So with that said, if you have any further questions, make sure that you either email us or phone us at the email address or phone number which is listed on the screen. This has been the end of week market review for June 21st, 2013. Ciao for now.